Hey there! In this session, we will talk about money and the companies that help you manage it, such as banks, credit unions, and the savings and loans that they can provide you and how they can play an important role in your child's success. Credit unions and banks are important because they manage and protect money for individuals, businesses, and the government. Did you know that in the early 20th century, there were no businesses that could promise people that their money would keep its value or be available when they wanted it? In 1933, the Federal Reserve Act helped create a safe banking system. You might hear it called the Fed. This became the main banking system in the United States. Today, however, there are many businesses available to you and your children that can take care of your money. Let's talk about why it's important to open an account and how it can help your child. Safety. When you have an account in one of these companies, you know that you are the only one who can get the money out of it. If your credit union or bank is robbed, your money is still safe because the company is insured. Credit scores. You may have heard of the big three credit reporting companies: Equifax, Experian, and TransUnion. These companies keep track of how well you manage your money and gives you a score based on the decisions you make. For example, if you get a loan to buy a car, the credit companies watch to see if you make your payments on time, if the payments include all the money that is due, and how often your payments are made. These scores are important. They let businesses know that you can be trusted if you want to borrow money, open a credit card, buy a house, a car, or even a cell phone. As you use your money wisely, your credit score will rise, meaning you can borrow money or get credit cards with lower interest rates. Money management tools. Most banks and credit unions have tools to help people take better care of their money. For example, if you want to save for a down payment on a car by this time next year, there are tools that can help you save a certain amount of money within a certain amount of time. These tools can also help you save for a house, school, or retirement. They can even keep track of where all your money goes so you can make good choices, and keep track of all your payments in case there is ever a problem. High interest loan companies. Beware of loans offered by payday lenders or loans guaranteed with something you own, like a car. While they are the last choice for many, these loans have interest rates that can go into triple digits. If you're unable to pay, your car can be taken away, which means you can't get to work, to school, or even the grocery store. Having a checking or savings account means you have choices, such as a line of credit, which has much lower rates than a payday lender, and low or no-fee credit card balance transfers, which can help during tough times. Working with a bank or a credit union also means that you do not have to pay to get your checks cashed. Although there are businesses that will cash your checks for you, they often charge large fees to do so. As well, if you have more than one account, you can easily transfer money from one to the other. Some accounts come with a debit card so you can make purchases without having to carry cash. Making good decisions with your money is good for you and your family. When your children watch you make good choices, it helps them understand that they can be smart with their money too. Now that you know some of the tools and services that both credit unions and banks provide, you may want to know how they are different from one another. Both offer many services that help you save money, invest, pay bills, and get loans. Banks are mostly privately owned and have to follow laws made by state and federal governments. When they make money, it is used to pay their leaders, employees, and investors. Credit unions are for people who have something in common, like working in a school or living in the same city. When you have an account with a credit union, you are a member and can vote on some decisions, like who will help manage the credit union. The managers are a volunteer board of directors whose goal is to make sure members are being protected. When a credit union makes money, it is used to give members lower interest rates on loans and lower costs on products and services. They also invest in programs that make their communities better places to live, work, and play. We all want to get the best value for our hard-earned dollars and manage our money in the best way we can. Choosing the right business to take care of your money is an important choice for you, your family, and your children. Make sure everyone works together to decide. Don't be afraid to contact the credit unions and banks you like and ask questions in person or over the phone. It's their job to help you make a smart choice. Thank you for watching, and we hope that you check back for more topics often.